Hello and welcome to this edition of Advisor Office Hours. My name is Jay Coulter. Our mission at Financial Advisor TV is to broadcast the advisor evolution so that you can be a better advisor. All of our episodes are recorded live and broadcast across our social media platforms in case you would like to ask any of our guests any questions. This is part of our Office Hours series, which also includes Marketing Office Hours with Matt Halloran of Proudmouth, Crypto Office Hours with Tyrone Ross, and two new segments that we're going to roll out today. Advisor AI Tools or Advisor AI Labs with David Ortiz, and Advisor Marketing Talking Points with Chris Versace. So today, we're going to feature a pre-recorded interview with Michael Kitces and Alan Moore that I was able to do at the XY Planning Network conference last week here in Atlanta. We'll premiere Chris Versace and his market talking points. And then at the end, we're going to talk to David Ortiz. On this platform, we're going to launch something called Advisor AI Labs, where David, who's an expert at AI and its applications for financial advisors, is going to come on in short segments and teach you some of the tools that he's experimenting with in his own practice. First, I want to start with some news and notes. This is going to be a segment where I share with the audience some of the things that I see in the marketplace that you, financial advisors, might be interested in taking a look at. The first is a study done by Allianz and Retire One. So something interesting inside of this, and I want to thank my friend Will Rubin over at Street Cred for sending this over. Inside this data from this report put together by Retire One and Allianz, I noticed that only 3 in 10 advisors report being unaware that there are fee-only annuities in the marketplace. To me, in 2023, that is way too many advisors do not realize that you can leverage annuities on a fee basis if you're an RIA or broker-dealer. So make sure you check that survey. I will have the links to that survey underneath the comments on all of our social media platforms. Next, the Fidelity benchmarking study came out recently. And the thing about the benchmarking study from the folks over at Fidelity is it's always packed full of really, really good data. So let me share with you a couple of talking points that I thought were really impactful, and make sure you reach out to your Fidelity representative to go and get a hold of this study and dig into it. So first, organic growth has slowed to below 4% in the major market RIAs. We're talking about firms that are $1 billion and more. A lot of this has to do with the fact that they're struggling with the market environment, but organic growth being less than 4% really does present a problem. The study also found that most firms in the $1 billion to $5 billion space plan on increasing their business development and marketing activities as we head into 2024. Whatever the size of your RIA is, it's never been more important to lean into marketing. There's opportunity out there to grab clients today. Also, buried in that data, I found something interesting on alternative investments. It's the data point that says that liquid and illiquid alternative investments are becoming popular amongst investors, but only 5 and 6 accredited investors are using them. What that means is that you, the financial advisor, have an opportunity to educate yourself on alternative investments and their impact in a diversified portfolio and get into the marketplace. There's some opportunities there. All right. First, I want to share with everybody the talking points, the advisor market talking points from Chris Versace. Chris is no stranger to Financial Advisor TV. Chris and I have been collaborating for almost 5 years on various projects on this platform and elsewhere. And what we thought could really help the advisor community would be if Chris put together in 60 seconds or less talking points that you could use with your clients each week. We'll make sure that this content is posted on all the Financial Advisor TV social media sites and included inside of office hours when I'm hosting. Here is Chris Versace.
Hey folks, Chris Versace here, Chief Investment Officer at Tematica Research and Lead Portfolio Manager for the Action Alerts Plus portfolio with TheStreet.com. Big week. Yes, the federal government has averted a shutdown, but we've got a slew of economic data coming at us that's going to really inform us as to the speed of the economy, whether inflation is continuing, and the pace of job creation. We're talking from S&P Global ISM, manufacturing PMI, non-manufacturing PMI, and of course, later in the week, the employment report, which will get previewed by what ADP has to say about job creation and wages. We've also got the resumption of student debt payments, estimated to take $70 to $100 billion out of the economy over the next year. All that plus a slew of Fed heads making the rounds this week, and we'll want to pay attention to what they have to say after that softer than expected core PCE price index for August.
Chris is the Chief Investment Officer at Tematica Research and also the portfolio manager of the Action Alerts Plus portfolio over at thestreet.com. He's always very generous with his time, and I hope you guys find this impactful as you start your week speaking with clients. So now I want to play an interview, but I'd like to set this up. So years ago, I started a podcast before there were very many in the marketplace. In fact, I believe that the first 3 podcasts in our industry were Michael Kitzes's, mine, and Brad Johnson's. And Michael and Brad both went out and built really, really big podcast audience. They're excellent at what they do. And I've had advisors ask me over the years, why have I never invited Michael on one of my podcasts? And the reason was actually pretty simple. I didn't think there was any audience overlap where he would have any incremental benefit from taking the time to come on our show. 2 weeks ago, I noticed that the XY Planning Network was going to be in Atlanta for their conference. For those of you who are not familiar with the XY Planning Network, it's an organization founded by Alan Moore and Michael Kitces to help advisors start their own RIA and provide the support as an advisor goes through the journey of starting to growing. So I noticed they were going to be in town, and I thought, I think I might have an opportunity to give him access to some markets that maybe he doesn't have full exposure to. This interview is going to be really helpful for anybody who is thinking about breaking away from a wirehouse, maybe breaking away from a larger RIA, and you're ready to go out on your own. You do not have to do it by yourself. As Alan Moore says in this interview, they don't make it easy at XYPN, but they make it easier. I hope you enjoyed this interview with Alan Moore and Michael Kitces at the XY Planning Conference. At the XYPN Live Conference with Michael Kitces and Alan Moore. Guys, I want to start with a story. In 2019, I came to my first XYPN Live. I was an institutional money management guy. I'm excited to be at the conference. Awesome. I put my suit on, my tie, and I go downstairs. First day, coming down the escalators.
And you are the only person in a suit or a tie.
I really fit out of place. I saw shorts, flip-flops, babies at the conference. And I realized
actual childcare on site.
Site. Yeah. All the way back in 2019.
Yes,
too.
Absolutely.
Yep. And I knew it was different. And I went back and I created a podcast after that experience. And I said, I think I've seen the future of financial planning with the next generation. I got some hate mail. They said, that's not real advice. Those people aren't going to make it. And boy, they could not be more wrong. Let me quote some stats that you guys gave today in your opening remarks. Okay, so 1,380 RIAs currently at XYPN. Yep. 13% of all financial planning RIAs, 100% of all state registered RIAs, and 25% of the Investopedia top advisors. Alan, what do you attribute those statistics to?
Ultimately, there's just so much demand from advisors who want to be able to run a business the way that they want with autonomy. And, we talk a lot in our space about being independent, but you find out just how independent you are when you go to leave the firm that you're with. And so many advisors are looking to serve clients a certain type of client that they want to serve in a way that they want to serve, charging a fee they want to serve, that they want to charge, and working in a way maybe remotely or hybrid or for overseas that ultimately supports their own version of a great life. And so we just continue to see advisors really, I would say absorbing the education and expertise that we've been able to provide around how to build a successful business, develop a niche, get really focused and build that successful business. And we're seeing just the growth and really the explosion of the growth of our firms.
You also mentioned that the audience was setting the standard in financial planning. What did you mean by that?
We like to use the term real financial planning. A lot of folks say they do financial planning, but our definition of real financial planning is it really starts with what are your goals? What are you hoping to accomplish out of life? And we're really the only profession that asks that question. Everyone else is rearward looking. And so we're the ones who say, okay, what do you want to accomplish out of your life? And then how do we ultimately align your finances to support that version of a great life? And so they really are setting the standard, the gold standard, in terms of what does it look like to do financial planning, to do comprehensive financial planning, to really be able to support their clients in all of their financial decisions.
Michael, great data in your presentation this morning. As always, one stat that stood out to me.
Yes.
Schwab has experienced about 5% household growth over the past year. XYPN members, 28%. Dramatic. What do you attribute that to?
So at its core, there's been this discussion in the industry for the better part of 10 years now of young people, to put in air quotes, our industry is basically like anybody under 55 or so, right? Not a retiree or a near retiree. Young people don't want to pay for financial planning advice. They're simple and they'll just use robo-advisors. And so on the one end, like just, I'm in my 40s now, like anybody I know in their 30s and 40s, if you ask them to describe their financial life, the word that never ever comes up is simple. Like no one says that. Like I don't have portfolio complexities. Like that's not my problem. I have a big pile of assets. I'm trying to figure out how to withdraw from it. But like, yeah, I have a lot of complexity that's going on in my life. It just doesn't happen to be portfolio based. And what we ultimately found is there's an absolutely immense amount of demand for financial planning amongst people in their 30s, 40s, and 50s. They make enough income now at that age and stage of career. They have the ability to pay for advice, like really meaningful, substantive fees, but they don't have a liquid portfolio. Either they haven't built that up or they're building in a business or real estate or employee compensation, or it's just all tied up in their 401k. Like they don't have an asset base to manage, and they're not looking to buy a product because they don't want to engage on the commission side of the model. They just literally want to pay someone a meaningful fee for advice. And ultimately, we're finding is there's so much demand for that even across almost 1,800 advisors in XY Planning Network, the average advisor has a 5-year client growth rate of over 28%. I mean, that's client growth rate. So revenue growth rates are even higher because clients move up market, fees climb over time. So even just raw client count, 5-year compound growth rate of more than 28% across the whole network of almost 2,000 advisors. There just is that much demand.
It's a mind-blowing statistic. Almost.
Yeah, it's like tens of thousands of clients.
Yeah. Yep. All right. So, Alan, being an entrepreneur is incredibly hard. Today, you said about XY Planning that we make it easy. We don't make it easy. We make it easier. Yes. I hate that I botched that quote because that's my favorite quote from your speech. How does XY Planning make it easier for the breakaway advisor?
Ultimately, when you learn how to be a financial planner, they teach you the art and the science of being a financial planner. They don't teach you the art and the science of being a business owner. And so that's really where XY Planning Network as a platform plugs in, is to help them understand what are all the compliance obligations that they have. How do they meet those obligations? Compliance can be really scary. There's not an easy to follow guidebook out there that says this is exactly what you need to do. We're able to provide our members with that. We're able to reduce the number of choices they have to make when it comes to technology. There are, I don't know how many hundreds of technologies on the Kitces.com technology map that they've got to navigate through. We just provide them best-in-class technology that they can choose to use, or because of our platform, they can go use any technology that they want. Making it easy to get E&O insurance, just all the things that it takes to run the business. And so that's really what we focused on, is providing what we call real support and sort of aggregating all the different things that it takes to run a successful business under one roof, so that it reduces the number of choices that you have to make, so that you can go focus on what matters and the part we can't do for you, which is going and getting clients.
And just as I would I spent a portion of my time, my career early on in the big firm environment as well. Like there's a story that we tell in the big firm environment that you have to be big, you have to have scale and size in order to succeed, right? You couldn't possibly be able to survive on your own without all of the infrastructure and support and services that we provide you as a large parent firm. And I think there's some validity to that, in that even in like the most purest of the independent firms, like it's not like advisors are literally like slogging out their own financial planning software by hand and doing all of their CRM by written Rolodex. Like there is technology, there are service providers, like there is support that goes around you. You're not literally like wildernessing it with your own two hands. But the reality is there is so much technology and service and support systems in the independent channels. Like even most of the major platforms, like they didn't make the financial planning software. They bought one of three. They didn't make the investment platform. They bought one of three. They like almost all of the categories now have like three major providers that you can choose from. And you don't have to be at a large platform to get access to those. Like there are lots of choices out there and of either buying it directly or ultimately even what we did with XY Planning Network, which say like, let us put together, like, here's the compliance support that you need. Here's all the technology you need to run your firm, like financial planning software and investment management tools and custodial platform and CRM system. And we wrap all of that together in less than $10,000 to get started from scratch. Firms are maybe $15,000 or $20,000 in for like all in costs to completely make your firm entirely from scratch. And I still see a lot in the large term world, like, well, maybe when you're like $50 to $100 million, you can go and break out on your own. I'm like, you're less than $20,000 all in first year cost to run your firm entirely on your own. So like $2 million at 1% covers 100% of your costs. Like you don't need tens or hundreds of millions of dollars to be operating independently as a solo. Now, I mean, it's no magic. We buy a lot of the same technology that large firms do. We're large enough at 2,000 advisors. We can get at very reasonable rates and then make that available to members. But this idea that only large firms can possibly have the platforms to make you survive and get like a big old chunk of your revenue in order to do it, it's simply not true. And I mean, we've now operated that for nearly 10 years, nearly 2,000 advisors. Like if we were a broker dealer, we would be one of the 20 largest. But we're not. Instead, we let all of the advisors actually own their own independent RIAs, run their own firms, and just give them the plug-in structure that they need to do it for a minuscule fraction of what most end up paying back to their platforms.
So you're lowering the cost of entry for these advisors, but it's not just for small advisors. Could you speak to any of the breakaway advisors you've had from the major wires and the experience they have leveraging this network?
Absolutely. I mean, name any firm. We have advisors who have left those firms, sometimes with clients, sometimes not, depending on their employment agreements, in order to ultimately find real autonomy, real independence in starting their own firm. And so we see advisors from across the industry spectrum who say, generally there's a specific client I want to serve, there's a fee structure I want to charge, there's a way I want to work that's just not supported in the large firm environment. I'm tired of compliance saying no. You can't do this. No, I just interviewed an advisor who said she wanted to write a children's book, but because it had to do with money, her firm said no, too much conflict of interest. So she had to leave to write a children's book. And those are the types of things that continue to frustrate advisors that are inside the broker-dealer wirehouse world and why they're looking for an independent option.
Yeah, overwhelming. We find the people we tend to talk to, it's you know who you are. Like you feel like you're the square peg in a round hole in the firm you're in. You're trying to do more and more of this financial planning stuff. The firm kind of says they're doing financial planning, but it really kind of leads back to the core business model of the firm. Like, look, if that's who you want to serve and what you want to do, like more power to you. But when you're saying like, no, I really want to do more of this planning stuff and like the people I want to work with and the way that I want to charge, my firm isn't really giving me the environment to do that, or they're giving me lip service, but then there's a lot of no's that come along with it. That's really who we're finding makes the transition to XYPN, because the whole platform is built around autonomy. Like you be you, like your firm, literally your firm, your entity, you can sell it someday if you want, your clients, they sign with you directly, all of your data, all of your agreements, it really is your thing. And like, no, you don't need hundreds of millions or even tens of millions. Like you can cover the fees with less than $2 million out of the gate. And all of a sudden that door opens up to say, well, if that's what I really wanted to do, like, I can really just go do the thing I wanted to do, and I'm going to go do it now.
So one of the bigger issues I think our industry is facing is there are not enough people getting into it. Mm-hmm. You quoted a stat earlier today that first year revenue for folks who are members of the network, $23,000, year 6, $300,000. And I think most people find the $300,000 surprising. I like that 1 year number. I started in a bullpen. Making cold calls. You started at an insurance broker dealer.
Oh, yeah. I was in a bullpen. I did not make $20,000 in my first year. No. Nope.
No, and how are we going to get the next generation of advisors trained up properly and into the marketplace? It seems like this platform could help facilitate that.
Well, the irony for what we're seeing in practice, getting to the earlier statistics about the sheer amount of client growth that we're seeing from member firms offering subscription fee financial planning models, is most of them are very quickly like running headfirst into the capacity constraints of I can only service so many clients, even if I get some good tech and some good platforms, some good admin support around me. Like I just hit a wall of how many client relationships I can manage, and then I need to hire. And we're seeing that happening writ large across the network. Like they're not hiring, frankly, the way that a lot of us were hired coming in the industry. Like, oh, you're ready to be a financial advisor. We're like, I can set up a cubicle in my office with a phone book for you and like go at it. These are firms saying like, no, I have a flow of clients and a whole bunch to serve. I need you to just be an awesome financial planner for these people. And I will pay you a salary, a good salary to just give amazing financial planning and service and make sure these people stay with the firm and feel well served. And to me, that's a huge shift that's emerging around growth tracks and entry paths into the industry. That, yes, I mean, even in the context of what we see for XYPN, if you really come in to start a firm from scratch and you don't have background experience, it's awful and you're struggling to make $20,000 in the first year, although 300 by 5 or 6 years in is a pretty good number. So you do get there. But honestly, I think what we're going to see more and more for the career track coming in is firms that we see at XYPN that are growing to the point that they need staff advisors to handle all the capacity challenges they're having because the model's growing so well. And you're not going to come in for a phone book to go get your clients. You're going to come in as an employee advisor to serve clients that are handed to you because there's recurring revenue attached to them, so it works for everyone. And you'll do that for 3 or 5 or 7 years and then decide like you'll stay in that job, or you'll move up and start building your own client base because the firm has an opportunity for that, or you'll decide to go out and hang your own shingle someday. But that becomes the career path. It's got salary, it's got stability, it's got experience building opportunities. And then later you decide if you actually want to build a client practice for yourself.
Yeah. So earlier today, Alan and Michael also talked about an idea, and it's not an announcement, of launching a corporate RIA on the XYPN platform. What are you thinking through? What do advisors need to be thinking about as it relates to this potential offering?
Yeah, ultimately our current model, which is not going to change, we're going to continue to offer the independent model, is that you start your own RIA, which means you are your own chief compliance officer. And you have all the responsibilities that come with that responsibility, and whether it be with the state or the SEC regulators. And so what we're evaluating, we have a lot of advisors or prospective members, and even some folks who are leaving the network saying, hey, this wasn't really for me. They're saying, I really just don't enjoy doing the compliance work. Can you just be my CCO? I don't enjoy, managing the technology. Can you just be my IT department? I just want to go do financial planning the way that I know to do it and do it the right way. And so a corporate RIA is what we're evaluating as an answer to that, which would give us the ability to allow advisors to go out and do what they do best, which is go get clients, build their own brand, be able to serve them in the way they know to serve them, while outsourcing a lot of the back and middle office work to us. A lot of it are services we already provide that our advisors can opt into on an a la carte basis, whether that be our compliance team or our in-house TAMP or our bookkeeping service. Really, it's about bundling those solutions and making it really easy for advisors to use. As long as we can, continue to adhere to our guarantee, which is what we make to our members, we have from day one, which is that, you can leave at any time. You can leave XYPN membership at any time with 100% of your business. That's all your clients, all your revenue, all your data. And as long as we can continue to honor that, then it's something that we're excited to evaluate and potentially move forward on.
And this is important. That's something you've honored the whole time with XYPN.
Absolutely. We started that way from day one. Michael and I both said, how do we create a platform that we would have joined, that we would have wanted to be part of? Because nothing makes you work hard more than knowing that your clients could leave you at any time. And that's how we've operated from day one on a monthly membership model. And our retention has been higher than most of the broker dealers out there. And they hold licenses and make it really hard for you to leave. So if anything, it just puts more pressure on our team to be sure we're providing great value to our members because they can leave whenever they want.
To me, ultimately, what it comes down to is, there is this trade-off that If you want to be entirely independent and have your own control, like you can own your firm, but the regulators have actually been very clear. Like if it's your firm, like you are the chief compliance officer. Even from XYPN's perspective, we do provide compliance consulting. We do provide coaching support. Like there can literally be someone with you to handhold you through every single compliance test you have to do and a piece of technology to automate it as much as you can. Like there's still things you have to do that you can't let go of. That is the reality of being your own chief compliance officer. It comes with the owner, the full ownership of your entity. And what we continue to hear from subset members is like, I don't quite need it at that level. Like, can you just be my chief compliance officer and do some of the rest of the stuff? And that's the sort of the hole we're trying to plug with rolling out a corporate RIA offering. It's not what frankly a lot of the other corporate RIA platforms on the business. Like we're not trying to aggregate members. We're not rolling them up. We're not mashing assets together to resell. Like XYPN is entirely privately owned by Alan and I. This is not PE funded. There's a venture to flip it in 5 years. We're literally just trying to solve a problem of how do advisors that want to really be focused on, I want to serve the clients, I want to do financial planning the way I want to do it with the clients I want to do it with, charging the way that I want to charge them, and that kind of financial planning platform. But I don't want to actually be my chief compliance officer in IT department. And so providing that way for an advisor to plug in to get that portion solved while still retaining all the rest of the autonomy to really do financial planning the way you think it should be done for the clients you want to serve.
And Michael, I know there's a massive market for that.
Yes.
All right. Final two questions. In the spirit of how social media is consumed today, you have less than 30 seconds to answer the question.
Okay.
All right. So your question. All right. What is the most impactful benefit of being an XYPN member?
It's really about the community and being surrounded by other advisors who have been there. They're further down the road than you are. They're alongside you, or maybe they're coming in behind you. But in the end, having a group of advisors who don't think you're crazy, who are very supportive, they'll give you the shirt off their back, is huge. And ultimately, that's the difference between success and failure as an entrepreneur, are the people you surround yourself with. And that's the number one reason our members say they stay members of XYPN is for the community.
What defines an advisor?
Oh, what defines a financial advisor? So to me, the core of being a financial advisor is when you're running a business that is truly built around providing advice first and getting compensated for the advice. So that means you actually have the competency and knowledge to give advice in the domains that you're providing advice on. That means you're running a model that is agnostic to what it is that you recommend, because it's not about the thing that you implement in the end. It's literally about the advice itself. Clients understand that they're compensating you for the advice and sort of like the knowledge between your ears that you're selling from these shelves. And when you run your business that way, to me, you're living the core of what it really means to be an advisor as opposed to an advisor, which unfortunately advisors kind of become a nebulous term that captures a lot of different things in our space, because even the regulators to me have been little lax about enforcing what that word means. So advisor to me is what defines this forward-looking focus of really being in the business of advice and getting compensated for it.
Gentlemen, thank you for your time. To learn more about the XY Planning Network, visit xyplanningnetwork.com. I'm going to start that over because my microphone was still muted. In 2019, when I launched my firm, Resilient Wealth, I joined the XY Planning Network. And the reason I did was purely economic. The discounts that I received off the technology that I wanted to use pretty much paid for what I needed. But what I found is the community and the additional resources that I had not even really considered were really impactful as I got that firm launched. So I appreciate Michael and Alan coming on to share that story. If you're thinking of breaking away, check out xyplanning.com. Next, I'm really excited to bring on David Ortiz. Now, David is a longtime friend. David is a very unique financial advisor. He's been featured in our Financial Advisor Stories episodes in the past. He markets under the brand Financial Chef, which is unique into itself. He's been featured in Robert Sophia's book on marketing and has been on lots of podcasts talking about his unique eye towards marketing. Recently, however, David has gone really deep on AI and how he can use it to help his practice. He's agreed to come on and produce a segment with us to help you, the advisor, better understand how AI can make you a better advisor. David, thanks so much for coming on.
Hey, Jake, thanks for having me. As always, I really appreciate it.
All right, David, we're live with this segment. In the future, some episodes, some segments will be live, some will be pre-recorded. Did I set the stage right? You're going to educate advisors on some of the tools you're looking at and the pros and cons of them?
Absolutely. I'm going to share exactly what I'm cooking up in my AI lab / kitchen.
Excellent. All right, so David, I'm going to turn it over to you. And what are you looking at today?
Well, I'd like to start out by giving what I think should be the foundation of all advisors' AI journey, and that's in a note-taking app. And so, because of compliance concerns, I am always, well, not compliance concerns. I run a really tight compliance ship. And so listening to Michael and Alan talk about XY Planning Network, I have really built out my own AI technology to put a compliance moat shield addition to my practice. And that starts with being able to document and have notes and client notes. So the most amazing tool that I found is one that is called Reflect app. And so Reflect app is a program that we're going to show you right now. Sorry for this. My Mac is not. Well, not letting me share.
So this is the beauty of recording things live. Tell me, in your studio at the bottom, do you see a present button?
I do, but it because I'm on a Mac and it just updated, it's making me basically re-enter the permission. So I'm very sorry for this. I think we have it now. And
David, you should know we have very good editors at Financial Advisor TV. So,
okay. You want me to start again here?
Whatever works best for you.
All right, let's see that we can share here. Yeah, there we go. All righty. Let's start at the beginning. So Jake, I really have gone into AI as a way, as really a solo RIA owner, entrepreneur, as a way to level up my compliance protection. And I am and have always embraced being the chief compliance officer. I also started in an insurance broker dealer. I became a principal, became a compliance officer. And, as I have been on my own for many years now, compliance is certainly a big concern. And number one is being able to document all of your interactions with your clients and your meetings. And so what I have really come up with is found a solution called Reflect app. And Reflect app is an amazing note taker. So I go way back to many of the tools, Dragon dictation, and then of course in our industry we're using things like Mobile Assist and so forth to be able to capture the thoughts for our client meetings. So with Reflect app, you're able to run many different prompts on any of your notes. It has a iPhone capability, so I'm able to capture all of my notes, and I actually do a daily note where I talk to myself as I'm out riding my bike or exercising. I talk about my day. But one of the ones that I am the most interested in is what I do with meeting transcripts. I record everything. I tell my clients that all of their meetings all of our interactions are being recorded. Nobody has any problem with that in this day and age. So here is a sample meeting. I changed the names and the data to protect their information, and I'm going to show you what I have been able to have Reflect do? So I have created a compliance filter where it prompts this meeting, and the first thing I'm telling it to do is pull out all of the suitability and know your client data that we had in a phone call. This was our introductory meeting. First time they came to me, they expressed an interest in my financial planning services. I had them in my mobile office. I fed them a meal. I had a conversation with them, although I know to ask them leading questions. And what I'm able to do is basically have all of this data pulled out. I then created a meeting timeline that has the highlighted areas that we talk to every time that we have changed a conversation, a narrative of the meeting, taking me from the beginning, what we really talked about, what the key points were, action items, and then where we left it. And so this is really amazing, because what I'm able to do here is set up a workflow where my staff knows that when the meeting is over, they get the transcript and then they run these various prompts on it. In addition to that prompt, I run also an email prompt where it is a summary to the client. And so from the same recording, I'm able to give them a meeting recap and next steps. And what I'm doing is using Reflect as my draft editor. And then I go ahead and take this and put it into another editor and finish it off in more of a long form. But you'll notice here that it's really talking about all the details that I actually had with them in the meeting. So they think I am a tremendous note taker. And the reality is that I don't have to worry about taking notes any longer, and I can concentrate on the client, maintain eye contact, not be looking up and down, and be fully present with all of those meetings. So to me, this has really become a game changer. And that's what I'm doing with Reflect.
Excellent. David, I believe that the website is reflect.app. Is that correct?
That is correct.
Excellent. If you're watching this live, we weren't able to get the screen share working. This is going to be a regular clip that we pull out of these episodes. So you'll get the details and video that David is talking about in the clip. David, I'm looking forward to doing this with you because you always have really, really interesting ideas from the world of AI. I really appreciate you coming on.
My pleasure. Thanks.
All right, everybody. That was the first Advisor Office Hours. We got to learn about some research that's come out from Retire One, Allianz, Fidelity. We heard an interview with Michael Kitces and Alan Moore talking about ways that you can go and start your own firm with the help of an organization like XY Planning. Chris Versace gave you the talking points for this week as you start your client meetings as it relates to the markets and the economy. And of course, David Ortiz came on and talked about how you can use AI in your practice to help make you a better advisor. Please make sure you're following us on YouTube. Easy to find the channel. We are Financial Advisor TV. We'll see you next time.